and Brent is $62, down by 0.22%. But in order to delve deeper into this topic, I would like to welcome Youssef Alshammari, Editor-in-Chief at C Markets. Good evening, Youssef, and thank you for joining me.
Good evening, Alexandra. Pleased to be with you.
Well, let's have a look at the major stories. Russia said on Monday it might support an extension of OPEC-led supply cuts that have been in place since January, while, of course, equity rose after China is financing growth to stem an economic downturn, giving oil a lift. So what is pretty interesting is that Brent is down by about 17%, WTI 20% from its 2019 peak of $75 per barrel, which right now actually a few days ago, almost went into a bear market. What's the matter with the oil prices, in your opinion?
All right. Oil price has been in fact in a bullish market until the past week. But due to the uncertainty surrounding global demand and surrounding also the trade deal between the United States and China, the demand coming from the US, the likelihood of extending the OPEC Plus agreement in the second half of 2019, these factors have all contributed to a significant decrease in the price, driving us into a bearish market, as you have mentioned. However, after the statement coming from the Saudi energy minister and the Russian president in the last St. Petersburg Economic Forum just days ago, as you can see, the prices have rebounded, and now they all look much better than the previous week. And also due to the confirmation coming from the Saudi energy minister that the OPEC Plus agreement will be extended in the second half of 2019. So that has led the traders to be much more certain about what's going to happen regarding continuing of OPEC reducing its supplies. Certainly, if OPEC would want to stop its OPEC Plus agreement, certainly that would lead the oil price to decline much more significantly than what we have seen. But I would expect the oil price to be not to rebound, but not to go too high from now until we see the OPEC meeting coming up. Most likely in July or perhaps end of June, because that's still undecided.
Well, at this point, what's the maximum level for the WTI and Brent, of course?
Well, we don't really have a very encouraging economic growth in 2019, and that's a problem. That's why I'm not sure if we are going to see a price that is very high, for example, for WTI. It could be around 60s, between that range, between 50, I would say, and 60 for WTI. Again, for Brent, it's possibly a minimum of 55 to 75 maximum. That's within 2019. That's the range that I would expect the oil market to be at, because, again, we don't still see a strong demand coming. There is still uncertainty about the trade deal between the US and China, and there is so much supply, in fact, in the market. Just look at the inventories from the shale oil in the US. They have been rising, and with an unexpected growth in the shale oil production. So these are the factors that do not seem to contribute to a very high price. But by the way, among OPEC itself, for example, Russia is happy with $60 to $65 a barrel, but for OPEC countries, this may not be the optimum price in order to bring investments back into the industry or drive the prosperity of the industry as of course it varies from one producer to another. So these are the possibly some producer may be happy with this current range and some others may still want to see a much higher price.
Well, you just said that there are a lot of shale oil output, which is true. But on the other side, we're witnessing a geopolitical crisis. In Libya, situation is crazy bad. Also, there are, of course, sanctions on Iranian and also Venezuelan exports. How is that possible that with all these geopolitical conditions of three of the major OPEC countries, we have such a low prices? And if this situation continues in the long run, do you expect a supply shock later on?
Well, the involuntary reduction in production coming from the three OPEC members you mentioned is coming at a time of low demand for oil. So conditions could change. Of course, the demand is dependent on the global growth coming from, especially from Chinese industry, also from the U.S. Still, the U.S. is also a major, still an importer of oil, despite their shale revolution. So I would say the involuntary reduction coming from Venezuela, Libya, and also Iran is just coming at a time of low demand for oil. But that's certainly because the conditions of the market always keep changing. I wouldn't expect to be that there is a supply shock at some point soon, because still the conditions within all these three OPEC members are not likely to change at some point soon. However, I think that OPEC will be able, with the current production capacity they have, because currently OPEC is producing at just less than 30 million barrels a day. They can certainly go up to 32. So they have about 3 or more barrels of oil in capacity. 3 million barrels of oil a day in capacity. That's not huge. Without considering, of course, the currently offline OPEC members, including the countries you mentioned. So I wouldn't really expect that there is a supply shock within 2019.
Well, talking about the OPEC, the meeting is only after less than 2 weeks or something. First of all, you just said that they're most likely going to roll over the output cuts, but do you believe this is enough in order to stabilize the price? And is it convenient for all of them to cut output, to roll over with the current OPEC policy? What's your take? Are they going to manage to find a common decision regarding the output cuts in OPEC policy in general?
I don't think extending the cut is a difficult decision for OPEC for now. However, the compliance from OPEC and OPEC plus countries to these cuts is, I think, the most important factor to be looked at in the second half of 2019. However, the extending the cut itself is, I don't think it's a difficult decision, because they already seem to be agreeing, especially between Saudi Arabia and Russia. They both seem to agree that the continuous cooperation in the second half of 2019 is something that they agree on. However, they are still the price level and issues related to the compliance easing on the cuts themselves. That's what they need to decide, I think, within the coming meeting. The second question, I think, what was the second part of it?
Well, if you believe this is the right number, this is the right policy in order to stabilize markets.
I certainly agree that certainly the market now is full of oil. There's just too much oil in the market, and especially the inventories in the US, they are much higher than the level of 2017. So they need to be within the 5-year average, and I think continuing the cuts of about 1.2 million barrels a day in the second half of 2019 is an important thing to continue on.
Well, absolutely. Thank you very much, Youssef Alshammari, Editor-in-Chief at Sea Markets. Thank you for joining me, and certainly we're going to talk very soon, exactly ahead of the OPEC meeting.
My pleasure. Always a pleasure, Alexandra. Thank you for having me.
Have a great evening, Youssef.